Hello, welcome back to Weekly Market Recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, the S&P 500 fell 3.28%, brings us down year to date 13.31%, reaching an all-time low for this year. The NASDAQ, we fell 3.93% this week, which brings us down 21.17% year to date, which is a bear market just within this year, not even looking back to all-time highs. So again, a lot more pain, a lot more volatility in this week. And there's a lot of catalysts that we're looking at. The Fed coming up next week. We had big tech earnings from Amazon that missed, and Apple, which actually did surprisingly well, but still some forecasting into future quarters not looking as good. Then we still have in China lockdowns, as well as the Russian-Ukraine crisis. So a lot of catalysts that are still going into the market, but let's jump into what we see in the actual market this week. So the first thing that obviously sticks out is, wow, that is a lot of volatility. So we started out the week trending down, rallied back up on Tuesday, all of a sudden just to fall, a few minor rallies. Thursday, we really rallied back up strongly before big tech earnings. And then we had some pretty big misses, which dragged the indices down. And we did rise right into close, but still we were down on the day close to 4% after a day of being up close to 4%. So just a lot of volatility throughout this week. So Rich, do you want to talk about some of the things that you're seeing in the market?
Yes, first and foremost there's a lot of concern about the Fed and Fed raising interest rates. Right now, the dollar is getting much stronger than the euro, which is an indication of anticipation of interest rates rising. In addition, the Fed has already indicated that they're going to be doing at least 350 basis point increases in their rate this year, which is a lot more. And there's a great deal of talk by economists and traders concerning that maybe the Federal Reserve is behind the curve on taming inflation, that they got it wrong. And as a result, they're going to have to raise interest rates much faster than was originally anticipated, and that may cause a recession versus the soft landing which Powell was talking about. A lot of that has to do with the fact that no one anticipated the Ukraine invasion by Russia, and coronavirus still becoming a very big issue in China, and China still doing lockdowns and causing more disruptions in supply chain.
Yeah, one of the, I guess, bad news pieces is that China actually has more lockdowns right now than they've ever had in the entire pandemic. And that's a pretty shocking news considering all the supply chain issues we had beforehand. So that's another negative catalyst. As for the Fed raising interest rates, one of the also big negative surprises from this past week was that GDP for the first quarter ended up contracting. So we were expecting, or analysts were expecting, a 1% to 2% annualized increase in GDP growth. Instead, we actually contracted by about 1.2% annualized. The definition of a recession is 2 quarters of contraction within GDP. So technically, we are already halfway to a recession. Now, when you actually look into the GDP numbers, most of it was due to exports versus imports, and not due to really the US consumer, which actually was still growing at about 2.4%. But again, we were expecting 3.5%, so we did miss even with the US consumer. So there is a lot of negative catalysts. Again, the Fed is going to raise interest rates. Again, the market is almost guaranteed at least 50 basis points, which is going to happen next week. And the Fed could potentially do multiple 50 basis point increases. We talk about this a lot, but the stock market usually is really trying to look out 6 months to a year. And when there's all this uncertainty, the market prices in things very rapidly. So I want to go back to the S&P 500. If we go to the year-to-date view, we see that we fell pretty dramatically. We started to recover, fell down again, recovered, fell down. We had a really strong rally. And then since that rally, we've almost fallen all the way down to, again, new lows even for this year. But one thing I want to just highlight quickly is, yes, we have fallen down pretty strongly, but look how fast we saw this recovery. This is what happens. The stock market moves really, really quickly in either direction. So you have these moments where within a span of a couple weeks, we almost got back more than half our losses from the year. Now, in the next month after that, we've gone down back to new lows. In the next 2 weeks to a month, we could see similar patterns of either rising very quickly or falling very quickly, but it's not so clear as to the trajectory of, are we, just straight headed down? No, there are all these interplays of going up, going down. What we're expecting is, with all the additional unknowns, this level of volatility, you're going to have a few weeks of amazing news that's going to lead the stock market to rally 10, 15%. And then all of a sudden, you're going to have a couple weeks of really bad news and it's going to fall 10, 15%. We've been seeing that this entire year. I think overall, to say that we know that the market's really volatile right now. We know that there's probably a lot of thoughts, concerns, questions. If you have any concerns, please reach out to us. We're here to support you. Your mind's here to support you. And we'll see you again next week, hopefully with some better news.